Welcome back, everyone. Next up, we have Patriot AG Corp. It's a private company run by the Severson family who migrated from Norway to North Dakota in 1895. They settled in the prairies in Canada and present a sixth-generation grain farm composing of 4,100 owned acres and 1,900 rented acres, of which they're focusing on growing barley, beans, canola, peas, and wheat. So excited to welcome CEO and CFO Eric Till. Welcome to the conference today, Eric.
Thank you for having me.
All right, the floor is yours. Call me back when you're ready for questions.
Okay. Thanks, everyone. Nice to meet you. I think, here's sort of an introduction, but what I want you guys to take away is this is a multi-generational family business. Been in the agriculture industry for over 100 years. We have some of the best farmland in this region. That's a very nutrient-rich and strategic location. No one has land this size that has the opportunity for you as investors to get in on. What we see is a strategic sort of arbitrage where we find mispriced assets in the land and the ability to invest and vertically integrate to capture additional revenue through sort of downstream sales channels and distribute finished product. With this additional value capture and this arbitrage opportunity in the land value, we see a unique opportunity that we think is attractive to investors. And I will be using some forward-looking statements here, so disclosure on that, which I think we've gone through as part of the presentation. So what we believe we can achieve is very attractive, sort of mid-teens to 20% return for investors. And we believe that offers a very unique and attractive opportunity in the market where we have a lot of assets that we're contributing. So high value assets and high opportunity for investment returns. And we think that presents a very unique value opportunity for you. So with that, I want to go into a bit more of an introduction to us. As we've said, we're farming 6,000 acres in rural municipalities, 301, 303, and 333. These are all within the Saskatchewan province in Canada. This is a very strategic location, and people colloquially sort of call it the Saudi Arabia of canola oil or canola. The land is uniquely sort of the soil contents and the sort of precipitation and quality of the region just really is conducive to canola growing specifically. It's the main cash crop in this area. A lot of investment, a lot of resources put in here. Namely, there's large crushing facilities, all within a close sort of distance to where the strategic land is for Patriot. And we're farming over 6,000 acres. And just for context, if you go and look at agriculture land for sale in this region, you're finding onesie twosies here, a few hundred acres. So owning and or farming 6,000 acres is a real strategic advantage for us. Our CEO has our family has over 43 years of experience doing this. Again, fifth generation, we've implemented high quality technology and farming practices to increase our yields. And we're coming to investors at a sort of pivotal moment where we want to transition from not just being a best-in-class farm, but being a best-in-class vertically integrated food processor and agriculture enterprise. A little bit about what we're looking to sort of achieve. We're contemplating 2 rounds, although we may consolidate into 1, depending on how the market sort of reacts. We want to, as we said, build and develop our own manufacturing plant, and we also need some cash or working capital to put that in. But once we do, we really believe we can achieve above market returns. There's just a huge amount of demand for this product. And we feel that we're leaving money on the table and there's an arbitrage opportunity to sort of manufacture it ourselves and distribute. So not only do we control the full supply side from the farming inputs, but now we would also control all of the outputs and be able to distribute it ourselves and capture that incremental value and really grow this, to a multi-hundred million dollar enterprise. What we want to build initially, it'll be a 30-ton per day processing plant. We're looking at, 13,000 liters a day of refined product, in addition to other ancillary outputs that create just incremental cash value. So nothing here is going to waste. We're looking to implement sort of the latest cutting edge technology and efficiency, both on the farming side and the manufacturing side. So with this, we will be able to have best-in-class yields and offer best-in-class pricing. And we're going into a market that just has a ton of built-up demand that's just not yet being met. There is just more demand for this product than there's supply right now, and we think we can capture that. We've had an engineering survey conducted. We're not recreating the wheel here. This does have some new technology for efficiency, but building a plant is, relatively known what you're getting into. It's pretty predictable. You know what your costs are. You know what you're going to be able to achieve. And so I think that adds, just going back to the same story of, attractive above market returns while investing in hard assets that sort of have this innate value and downside protection, which we think is a really attractive opportunity for investors. Why canola? And it's in short supply in the medium to sort of long term for a number of factors. There have been droughts, there's been international pressures, really just, commodity type risks, but also longer term trends. For instance, canola is used in a lot of biodiesel and other sort of clean technology supply chains. And so we are looking to capitalize on that and get into the market while being vertically integrated. Consumers are seeking healthier dietary options. These are all long-term trends. It's an important component, and we expect to continue to see increased production, but there is just more demand than the supply is expected to be able to meet. And that's where we think we can step in and really just, once you build it, the demand is already there. We've already been in discussions with offloading this through multiple different channels, and it should be a pretty easy plug and play, build it and distribute it, hopefully even be able to pre-sell it when it's on the production line. Again, as we've sort of talked about, the Saudi Arabia of canola oil, we're in some of the most attractive regions. Happy to go into details with that on another call, or if anybody has questions later. There's robust information available on this sort of market, what the region is and what the overall trends are. Speaking to this as well, what I was mentioning before. So happy to go into details. It is the #1 cash crop in the region, billions of dollars. So a very large and robust and deep market. Again, should be easy to plug and play with the refined product. In terms of our competitors and where we really think this is attractive, when we talk about other scaled farms in this region focusing on canola, there's only a handful that operate at the scale that we do, and none of them are really open to being publicly traded. So you as an investor just cannot get this exposure through other means. And we think that's a really attractive opportunity to partner with us. We have this great vision and growth plan, and we think opening it up to equity investors can really make an attractive investment opportunity that's different than a lot of things that you would have in your portfolio. And in addition to this, again, best-in-class technology that we'll utilize really sets us apart from a lot of the other competitors out there. We can go into more details about this. A lot of it, I think, is a little bit, farm lingo and sort of agriculture nerd terms, which we're happy to talk about if anybody wants to get into it. But because we have been doing it for so long, and we have, educational resources and people with, as we get into the biography slides, really, best-in-class knowledge and deep education, we can implement these cutting-edge technologies where the other farms around here just can't. And that also presents attractive strategic opportunities in the future to partner, acquire, or otherwise grow our presence in a roll-up sort of strategy and implementing our best-in-class practices to reach even further scale. So again, these are some of our differentiators. Happy to go into them if anybody has questions about them. But the simple point is, it's economies of scale. I don't think there's any secret here. Being big is better in this sort of space. And so we are at that larger end of the small scale, and we're ready to sort of take it to the next level. We've built the storage, we're building the production facilities. We have the ability to, strategically invest and deploy fertilizer, pesticides, and the other things, other inputs into our farming practices that really can take us to the next level. Again, going into some of the management bios, our chairman has over 42 years of experience. My background is in financial services, and I'm helping, facilitate positioning the company and making sure that we're friendly to Wall Street and that we can generate really attractive returns for our shareholders. Our COO has tons of experience, both in farming as well as in the sort of production and general business sort of operations there. And then one really great resources we have is Courtney with an agronomy background, really best in class, really staying on the cutting edge of the technology and farming practices. So if some new technology comes out that can make us better or make us more profitable, Courtney's on it and she'll help us implement it. So really, really a valuable resource. And I think when you combine all of these together with the really powerful asset base that we have, I think it creates a really compelling opportunity. And just in sort of wrapping up before Q&A, we've reached economies of scale that few other farms in the region have. Saskatchewan is a global leader already in canola oil. It's already made the investment. And I think one of those value opportunities that I mentioned at the beginning is the farmland values in Canada just have not caught up to their US counterparts, even though the efficiency is there or even better than some of their US counterparts. And so the ability now, both with the vertical integration and the ability to acquire more farmland at these lower prices, we can kind of capture that value and arbitrage and harness it and then distribute those proceeds to shareholders through dividends and stock price appreciation. So we think that is a really compelling value opportunity, and we're really excited to bring it into market. And then we also have, as I mentioned, some new opportunities to grow with some of the capital and exactly some of those arbitrage opportunities and acquisition opportunities we've talked about. So with that, I'd like to open it up to Q&A if anyone has questions.
Great. Thank you so much. We do have some questions for you. So talk a little bit about why Patriot is pursuing this strategy right now.
Yeah, that's a great question. And I think a big part of that has to do with those supply and demand imbalance that we're seeing. So there is just more demand and more use cases for both the refined product, the final canola oil product, as well as the canola grain. And those trends are not expected to be short-term trends, both through the clean technology, clean energy with biodiesel, renewable jet fuel, things like that. There's a lot of exciting technologies coming out in addition to the already sort of baseline demand that there is as an input to things like cosmetics or cooking. Everybody probably has some cooking oil. It's still one of the most popular ones, and it's cleaner than a lot of the alternatives. So I think recognizing that there's a long-term demand shift is one of the major reasons this is attractive, and the fact that the land values haven't caught up and that we can still make a really attractive ROI by vertically integrating and building this plant make now really the opportunistic and attractive time as an entry point, we feel.
And Ishmael Hamilton wants you to talk a little bit about your process from seed to sale, packaging. How does it work?
Sure. So we are the farmers. In fact, some of the people listed on the bios aren't here because it is one of the first planting days of the season. So they are literally out there, out on the tractors and planting seeds right now as we speak. So it's very much a roll your sleeves up and get down and dirty agricultural type of process. But we like that. Those assets in that land have value. So to talk a little bit more about the process, at this size, we can negotiate attractive seed pricing. So obviously that's one of the inputs. Same thing with fertilizers. we have liquid fertilizers and some other sort of, we'll call it attractive technologies would be the, and honestly, I'm probably not even the best person to go into all of the details on this, but we could absolutely set up a follow-up conversation to get everybody off the farm and to talk to you about every single step. But we can secure large quantities of all the inputs from seeds, pesticides, fertilizers. We have the storage facilities to store those, as well as the final product. So take the inputs, we get a little bit better pricing because we're at a larger size. You plant, we have one harvest per year. And with those storage facilities on site, we store our product and then we can feed that into the plant that we're building and be able to churn out 30 tons per day processing capacity of the canola inputs. And we have a look through to be able to expand that to 60 with relatively little additional CapEx. From there, we can bottle it into, we're pursuing a variety of different sort of end channels offtakes. It could be branded product. We have the ability to develop our own brand of non-GMO organic sort of product and bottle it, package it, label it direct to consumer, fulfill right there on site. We can also do it on a white label capacity. So we could be a branded good for a regional chain. We could also do it on industrial side in gallons or barrels and get it into industrial applications for the hospitality industry, restaurants, things like that. Or at the end of the day, there is always a very deep and very active sort of spot market to top off sort of industrial orders, and it can be distributed just in a barrel, in a container. And we can control that entire chain from the seeds to selling to the consumer or our other offload channels. And we can capture incremental value and profit at every one of those. So instead of selling it off as a commodity, as a grain, and you lose out on that additional marginal profit through selling the refined product, now we're going to capture every one of those. Does that answer your question?
It really does. It's a great answer. Thank you for that. Kevin asks, how is your industry historically affected by recessions?
That's a good question. So cooking oil, obviously, you would probably call, what's the word? Not inversely correlated, but relatively non-correlated. I think certainly there's a decrease in hospitality applications as people travel less and those type of things. But it really, I think the combination of having different offtake channels that we're contemplating, both from cooking oil to consumer, to industrial applications, to other inputs, or even jet fuel, I think we would be able to diversify our different channels. So I think I'd have to call it up and look at the chart. Certainly the commodity price sort of has fluctuated up and down, but I don't know what the correlation is exactly off the top of my head. But I think we would diversify it.
And Doris Marshall asks, based on your region, can you explain if you have any benefits of any indigenous factor?
I think the question we're asking here is soil content and that type of thing. And if I'm understanding that correctly, then I would say yes. There's a couple things. The nutrients in the soil, and I again will plead ignorance here. Other people can answer this much better than me on our team. Would love to have a follow-up there. But the nutrients in this soil are particularly conducive to growing canola. I don't have the exact terms off my head, but it's the soil content and it's the annual precipitation, the rainfall that's natively there. A lot of this land doesn't even need to be irrigated because of the average rainfall. So you've got a combination of altitude, soil content, precipitation, that type of thing that's unique to these rural municipality zones where we operate. That make them sort of the most attractive.
And a few questions regarding your land. One, Elm Reed wants you to go back over how much of your land is owned and leased. Sure. And then Cam wants you to talk a little bit about your current land volume. With your growth, do you need to add land to grow?
Great questions. So right now we own 4,000 acres that will be part of the deal. And I do want to harp on that because you can look at these in the market and you'll see they should trade for around $5,000, $6,000 an acre today. We think that could double potentially in the next 5-10 years. to get it in line with where certain public companies in the US are marking their land assets of similar quality. So we think that presents a unique opportunity. And that being sort of a backbone, really, I think helps with the downside protection as a public entity. We're contributing all the assets, not just the land, but the farming equipment, the buildings, and all the infrastructure and all of the plant that's being built will all be a part of this. So you're going to have a very asset-heavy entity going forward. So that's one question. So 4,000 acres owned, 2,000 acres on long-term lease. And the answer to, I think, your question is yes, we do need to get more land. Well, I should say that a different way. We need to get more inputs to satisfy our 30 tons per day processing capacity early on. There's two ways we could do that. We could go out and buy the land with or without leverage. We could sign more long-term leases. And again, here, I think I still have on the screen some of these opportunities in terms of the size that we have at our disposal that we could sign the deal today, or let's say today, meaning within the next 6 months. Or we can just buy the grains on the open market as inputs to the plant. So I think those are three different ways. And I think, we can, with equity partners and potentially some debt partners, we would have the ability and the luxury of being able to, go after each one strategically. So we wouldn't be forced to spend capital into buying or leasing if an attractive opportunity presents itself in the grain market to buy on the open market. So we think we can sort of strategically deploy into any of those. But part of our sort of raise is to ensure that day one, when the plant is ready to go to 30 tons per day, whether it's our farms or we have to buy the inputs on the open market through futures or forwards contracts, we're ready to ramp day one.
Thank you for that. Faith Allen asks, being a private company at this point, what public companies can be used to benchmark a public valuation on your company?
That's a great question. So we haven't necessarily seen perfect comps. When we first started thinking about this, we were originally thinking about a REIT structure, right? A real estate investment trust. But I think given that we want to vertically integrate and have sort of these plans and potential other sort of ancillary attractive opportunities that add incremental value, we're not sure that the REIT market was the right one to comp ourselves against yet right now. But with that said, there are some public farmland REITs in the US, and I think you would look to them and look at how they value their land to kind of get an idea of where we're looking at it too.
And so Ivan says, you go public, you raise money. How do you put it to work? What do you use the money for? And what type of return can be expected on it?
Yeah, it's a great question. So I think going back to what I was saying, we have first and foremost, we want to build out the manufacturing plant, the refining and processing facility. So that's going to take up the bulk of the capital. Now, these are in hard assets, hard machines, plus some labor to put them together. But in terms of what that goes on to the balance sheet, it's not a lot of loss. These are a lot of the cash is going into productive assets with a very long useful life and a lot of technology and very high scalability behind them. So that's first and foremost. The second use of proceeds will be used to ensure that we have a reliable stream of inputs to put into that plant to have it ramp day one. And that could be through land acquisition, signing long-term lease deals and partnerships, or just buying the raw grains on the open market, commodities market. In addition to that, we need to purchase some more seed, pesticide, fertilizer, to produce more of these inputs, as we sort of talked about. There's a little bit of working capital there as well, but most of what we're doing is earmarked, all going into productive assets, and we're targeting around a 20% return for shareholders. Obviously, that's a forward-looking statement, but we really think over the next 3 to 5 years, both with asset value appreciation and the ability to capture that incremental value by vertically integrating, that's what we're hoping to achieve.
Thank you for that. Shai Graham says $100 million enterprise will surely be the result of many different revenue verticals. So explain your plan for developing these.
Yeah, so I think I think first and foremost, the primary one is going to be selling off the refined food grade oil. That's probably low hanging fruit number one, and that's attractive for the reasons I mentioned before. And that's selling the revenue stream of the oil itself. In addition to that, there's a lot of attractive opportunities we're potentially seeing in the biodiesel, as well as the jet fuel sort of product. So those are different, if you will, like qualities of the product, like what the product actually is. So those are different potential types of product. And then within the revenue streams, we feel strongly that we could develop a brand name behind us. Again, non-GMO, organic. We can create a branded product that people sort of trust or will know on the shelves within this sort of canola oil space. That's one potential one, direct to consumer model. We could also sell it wholesale through distributors. We've talked to multiple distributors who are already very excited about this opportunity. And then in addition, just selling at large scale industrial grade. The market, I don't have the materials as part of this presentation, but if you ever want to have a follow-up, we have tons of just really deep immediate demand that are looking for the refined food product today. And the order volume just far exceeds the supply that's available out there. So it's multiple different revenue streams and multiple different potential products. And the plant could support any one of these with relatively modest sort of tweaks and adjustments.
Jenna asks, what does your 10-year growth look like compared to your competitors in terms of top line and market share?
That's an interesting question. We haven't run that deep of an analysis because candidly, it's a very large market. I don't think it's a new frontier for the most part. There are new applications, so you would expect this to keep growing. But even just in the region, it already being a $20 billion market, $100 million is just, it's so, fragmented at this size that we haven't run a super deep analysis of how we compare to the aggregate, because I think any market share we gain will just be higher than how the market would perform, if that makes sense.
It does. And last question for you. Thank you for taking all these questions. Just talk about what makes this an attractive investment opportunity.
Yeah, I think what I really want, the audience here to walk away with is that we are investing in real productive assets, and we're contributing land that's conservatively worth, $20 million. And so with that, you're getting an opportunity to invest in something that we expect to become a cash cow and to just be producing reliable dividends year in and year out to investors. And so you're getting kind of that REIT type, real estate investment trust type of downside protection and strong asset base on the balance sheet, just a fortress balance sheet, while also getting this attractive upside through vertically integrating. And so I think that downside protection with very high return potential is just a really attractive opportunity for any investor. And we feel that this opportunity right now, we're at that inflection point where the land values are going to catch up to the US, and the timing is kind of everything right now, where we can get in now and ride the upward wave. And I think that'll also not only help with downside, but just add to the upside potential for investors.
Perfect. Eric, thank you so much. Really fascinating, wonderful industry you guys are in, and we appreciate you being on the conference. And please come back with some updates.
Will do. Thank you, guys.
All right. Everyone, Ideanomics had to push to June, so we'll be back at 3:55 Eastern with Maritime Launch. We'll see you in a second.